Hi, my name's Joe Achaturo. I'm a certified public accountant, and I'm going to teach you everything you need to know about doing your own taxes. So let's get started. Hey everybody, I decided to do a different kind of video today. This one's going to be short, and it's going to be pretty much to the point. I'm going to teach you how to understand your 1040, and I'm also going to show you why you can't believe most of the stuff printed in the news when it comes to even the most factual of things. Even the most factual of things that could easily be tested, like math. They always get it wrong. The news gets everything wrong all the time. So let's take a look. Right, we got Yahoo, and I've seen a bunch of these. So this just happens to be one that I picked up. Trump's tax scam. Some payers get unwelcome surprise after filing returns, right? So we go down, and the whole article is about how you got screwed by Donald Trump because you have a lower refund on your taxes. No part of this article, right, goes into any of the facts. None of it. The whole article is strictly about your refund. And how it's a giant scam. Because there's a narrative behind it. But now let's look at how to read your tax return. Right now, as you can see, I've pulled up the same client's taxes. I've blacked everything out so you have no idea who they are. But let's take a look. We have a 2018. Yeah, you know what? Let me get my pointer because it's going to be hard for you to see. All right, we have 2018. We have 2017. Let's see the difference with just about the same exact income in what their taxes actually are, right? So we come down from comparative purposes, right? Both married filing joint. Both married filing joint, all right? We have a dependent. We have a dependent, right? Both qualify for a tax credit, but we're going to see there's going to be a major difference. What I've done here is I've taken all the income, and what I've done is I've made it equal to last year's income. Right? 2017, 2018. Income's the same. There are a couple of differences that are small, right? The forms have changed. But let's take a look. We have wages the same. Our standard deduction, right? So in the past, there was an itemized deduction on this tax return. Why? Because the standard deduction was lower. The standard deduction for a married joint was $12,000. This year it's $24,000. Okay? There's a limitation. If I go down to the itemized deductions, there's a $10,000 limitation on your state and local taxes. So they're maxed out at $20,000, and that's fine because what they would have had then would be a standard deduction of $24,000. So now the standard deduction's higher. Same thing with this, right? No limitation based on the previous year's laws, and their total deduction was $22,983. So let's take a look. $22,983. So even, they still get an extra $2,000 deduction. So let's look at the differences. Exemptions. Right? You would get a tax exemption. Let's see what it was. $12,000 exemption. That exemption's gone. So we get all the way down to taxable income at $151,372. Well, what's our taxable income here? $163. It's higher. Oh no. We have a higher taxable income. $163 in 2018, $151 based on the same
just about the same exact income. So we have a $10,000 more of taxable income. But let's take a look at what happens after we do the calculation. There's new tax rates. The tax rates are lower. So our new tax is $27,743. Well, let's come over here. What's our tax? Hey, look at that. $29,000. So we have actually higher taxes in 2017 than in 2018. That's for somebody making almost $200,000 a year. Higher taxes in 2017. Then what do we get? We get a child tax credit over here, where before we were phased out of a child tax credit in 2017, right? No child tax credit, zero. So that brings our taxes down another $2,000, right? So what do we have? We have about a $25,000. This thing is annoying. Let me get rid of this. All right. We have a $25,000 tax credit. A total tax bill after tax credits, $25,000. Let's look over here. After child tax credits, our tax bill's $29,000. So we have a $4,000 difference in our tax bill. Do you know why people are getting lower tax refunds? It's because they had less taken out of their taxes throughout the year, right? So when you got your paycheck, you had less taken out. There was a difference in the way the IRS calculated what the withholdings was going to be. So that means you're going to get less as a refund. But the net amount in your bank account is an extra $4,000. That's huge, right? An extra $4,000 in your bank account. So it doesn't really matter if you got a high tax refund. What matters is you have $4,000 more dollars in your bank account. Would you rather get a $4,000 tax refund but have $4,000 less in the bank at the end of the year than this year? That's the question. And that's the quick way on how to properly read your income tax return. Because your tax refund doesn't mean anything. All it means is you gave the government way too much money last year. And then when you prepared your tax return, you got all that excess money you gave the government to hold that you weren't allowed to spend. They gave it back to you. That's all that means when you get a refund. Is throughout the year you gave the government way too much money. Now, before anybody tries to make a stupid comment like, oh yeah, but this guy makes a lot of money, right? This person lives in a high tax state. Their income's well above what a normal family would make. And let me tell you, the less you make, the greater the 2018 tax code helps you out. The greater it helps you out. Because you're not going to be subject to those limitations on the itemized deduction, which means the standard deduction is going to be even more beneficial to you in 2018 than in 2017. Because let's face it, if you make $50,000 a year and you're a married couple, $60,000 a year, you're not living in a house where you're paying $10,000 a year in property taxes. So you're way better off in 2018 than 2017. I mean, I could go to the websites and show you all the ignorant comments that I see. But it's not going to do anything to help you understand how the tax code actually is helping out middle income and low income workers. This thing is in your benefit. Don't believe the nonsense articles that are based on the ignorance of the writer who has a degree in journalism and not in taxation, and who's getting paid for clicks and clickbait ads and clickbait articles instead of trying to show you the truth about your tax returns and how the tax plan actually is beneficial to you. Right? 29,000 versus 25,000. 2018 versus 2017. And that's the end of this video. So to finish up and go back to the video on that stupid article, I knew the middle class was getting screwed. I had a glimmer of hope that maybe I would be equal to what I was before. But now I see it hurt me. I voted Democrat down the line in November, and I'm definitely going to do that in 2020. Really? Really? Come on. People are crazy. People are crazy. Listen, it's not Donald Trump's fault that you spend every dollar you take home. It's not Donald Trump's fault that you don't have the personal restraint to save money. Like I just showed you, $4,000 more in the bank. Now, in this year, those people actually owed maybe $800. They owed $800, right? Which meant instead of them having paid $25,000 throughout the year, they only paid in $24,200. Right? So they owed the other $800 to the government. Net, again, they still had $4,000 more in their bank account than they did in the previous year on the same exact amount of income. That's so important. And at a certain point, a little bit of personal responsibility goes a long way. People need to get out of the frame of mind that they need a giant tax refund to be their savings, right? You can open up a savings account in your bank, transfer $100 a week into that savings account, and at the end of the year, you'll see all the excess money that's in there. Right? You save your money. You make interest on your money. You open up an investment account, put that money to work. Watch that $4,000 that you saved become $6,000 or $5,000 at the end of the year after it grew. Your savings in your retirement are your responsibility, not the government's. Thank you once again for watching this video. Don't forget to subscribe. Don't forget to click notifications. On My Free CPA on YouTube, you're going to have a link to myfreecpa.com. On here, I would encourage you to sign up, get yourself an account, because you're going to be able to save all the courses I put that are relevant to you. And you're going to be able to go back and reference them year after year after year. In addition, there's going to be a do your own taxes link. This is going to be free online tax software if your income is below a certain threshold. It's basically just like TurboTax or H&R Block online taxes, but cheaper.
right? This is the professional software I use, put online for individuals. I'm going to be using this software in most of my videos to explain to you how to do your own taxes. So if you want to sign up for this, please use that link. And when you use that link, I get credit, right? If you're going to do a tax return that's going to cost you some money to prepare using the tax software, because again, not all tax software is free depending on your income levels and your other circumstances, I am going to get some credit and get paid for this so I can keep putting up this videos for you. Thanks once again, and have a great day.